Okay, Rick, that's perfect timing. Um, Good evening, everyone. This is welcome to the Anderson Report. It is Wednesday, August 26th. Let's see if I got that right. I did get that right. It is Wednesday, August 26th. This is the Anderson Report. I am Tim the Source Anderson. This is my YouTube channel. For if there are any new watchers out there, please subscribe by hitting the red subscribe bar below the video screen, and you can hit the little bell that's right next to it, and you will get a notification of when we're going to have our next broadcast. I see Mark Johnson is here. Mark, it's great to have you with us tonight. Um, so this broadcast is also on Periscope. That channel is TJ Anderson 12 on Periscope, or you can just watch it on my Twitter feed, which is TJ Anderson 1. And if parts of the program seem very similar to what we talked about last night, no, this is not a replay of last night's show. We just had market activity today that was very close to a replay of yesterday's market activity. Big fish, durable goods revised up. You know what? I'm going to check that real quick because I had a very busy morning and I did not see all of the economic data that came out in the morning. So, big fish, thank you for alerting me to that. I'm going to check it right now and we'll have an update on that in a couple of minutes. Look, we've got the same thing going on in the market that we had yesterday, that we had a little bit last week. It's just a little bit more extreme today than it was, let's say, yesterday and even last Friday. And bear with me just one moment. So the it's a broken record. All right, the S&P 500 was up 1% today, 3478 and change. It was a 35-point gain, so it's actually up a little bit more than 1%. The NASDAQ was up 1.7%. The NASDAQ closed at 11,665. Just, I don't want to scare anyone out of the market, but some of the excesses going on are I think, starting to be a little bothersome. The NASDAQ new high, S&P new high, it's great. I just don't think that this pace of the rally can continue. Also, the market breadth, the internals, the advanced decline stats were really not positive at all today. Again, I'm not trying to throw cold water on a rally. If you're heavily invested in tech, if you're invested in the S&P 500, that's great. Okay? But you've got to temper your expectations going forward a little bit. The transports, Dow Jones transports, we've mentioned them a number, starting to mention them the last couple of weeks, pretty much unchanged, 11,126. Now, here's what's the bothersome stuff here. At the NYSE, 2 stocks advanced for every 3 stocks that declined. That means there were a little bit less than 1,200 advancing issues. There were 1,800 declining issues. On the NASDAQ, there were 4 stocks that declined for every 3 that went up. So in the NASDAQ composite, close to 3,400 issues, an index that went up 1.7% today to close at the third all-time high of the week, possibly the fourth in a row. I think Friday was also. You had more stocks down than up. The rally has narrowed, and it is still narrow. We had thought that maybe yesterday, with the advanced decline stats being close to even, that maybe we had that late rally yesterday in the last hour. Sometimes it takes the advanced decline stats a day to catch up to a very late day rally. We didn't see that at all. And stocks were up out of the chute and up all day long. John, thank you for joining us. It's great to see you. So it's just something to be aware of. Gold up $30, 1,952. I think it's up another $7 or $8 in after hours trading. Crude oil had a nice day today. Here's another, just the divergences. When I talk about negative divergences, we've got one big negative divergence with the breadth of the market really not participating to the extent that the big capitalization weighted market averages are, primarily the S&P 500 and the NASDAQ. And you've also got this reality where oil has been going up, and I think that's positive for the market because there's a sweet spot for oil where you get low gas prices. Clearly, if oil went totally crapped out and traded into the low 30s, gas prices would go down significantly. That would be positive for the consumer, but it would be very negative for the employment picture in the oil industry, particularly the higher margin, higher cost aspects of the oil industry, the fracking and the shale stuff, the stuff that goes on in peripheral parts of Oklahoma, and most notably in North Dakota, but also even in Pennsylvania and parts of Ohio. Oil 43.40. I know it was probably above 43 early in the yesterday. At one point, it didn't close there. Today it went out at the end of the day 43.40, and amazingly, the energy sector of the S&P 500, 11 sectors, 11 primary sectors, energy is one of them, down 2.2%, with oil trading at its highest level, closing at its highest level since February. That's just a divergence that I don't really like. I think it's got something to do with the fact that people are just continue to chase price performance in the mega growth tech space, the stocks that are leading the driving what I've called the internet traffic trade. And they're your momentum investors that are looking at a combination of earnings momentum and chart price momentum. That's the big game right now. I'm not going to call it a bubble, but it's frothy. It's frothy to the point where it's a yellow warning flag, I would say. Maybe bright yellow. Energy down 2.2%. The lowest close for the XLE, which is the S&P Spider Energy ETF, since July 15th. Yes, that's only 5.5 weeks ago, but the price of oil is a lot higher than it was then. So you just have money leaving that sector. I think it's an overreaction, but it is what it is. So Other sectors that had notable performance today: communication services. This is part of the big mega growth tech space in NASDAQ, up 3.7%. 3.7%. We'll get into why in a couple of minutes. That's a very sharp increase for an S&P 500 index that went up 1%, uh, and a NASDAQ composite that went up 1.7. Communication services up 3.7%. Consumer discretionary up 1.5%. Investors are still betting on the consumer being flush, even with no stimulus 4.0 plan yet, even with unemployment, the extra federal unemployment kicker at best being $300 a month, down from $600 a month, maybe with an extra 100 added in if states decide to do that. Infotech, there's the other half of the internet traffic trade uh, sector, up 2%. So you got communication services up 3.7%, infotech up 2%, NASDAQ up 1.7%. Why wasn't NASDAQ up more? Because you had 4 stocks decline in NASDAQ for every 3 that went up. Even in the NASDAQ composite index. This is not the NASDAQ 100. You will see a lot of places post the NASDAQ 100 with their other leading indexes on the financial news networks. You will even see some of them post the NASDAQ 100, which is only 100 stocks. It's even much more heavily tech weighted than the NASDAQ composite, which is 3,400 stocks. And it's even much more just totally stacked with these mega growth tech names that are driving the internet traffic trade. You will see financial news networks post what the NASDAQ 100 is doing along with the S&P, the Dow, and then talk about the NASDAQ composite trading at a new high today. Well, it may be trading at a new high, but it's not. The NASDAQ composite is not the NASDAQ 100. The NASDAQ 100 is an even more heavily weighted toward mega growth tech list of stocks. It's the 100 highest capitalization stocks in the NASDAQ composite. It is not the NASDAQ composite. It's just mega growth tech on steroids. Energy down 2.2%. Financials down 0.5%. Look, one other positive potential data point for financials was that the 10-year yield went up a little bit today. It's creeped up a little bit this week. Remember a week ago, or maybe a week and a half ago, it got up to above 0.7% to 0.72%. It was about a week and a half ago because it was coincident with that 3 or 4 day rally that we had in the financials that failed badly afterwards. Now, we had a nice little pop in the financials either yesterday or the day before. It was 2 days ago. It failed yesterday. It let's just say it did not follow through. It's pulled back a little tiny bit. It has not followed. That move in the financials has not followed through. I just have a feeling that the financials have a better shot here to follow through than they did in early June, and then they did a week and a half to 2 weeks ago, especially if we could get that 10-year yield at 0.69% to hold that level, maybe even go up above 0.7, maybe even try to get up to 0.75 percent. And bear with me, I just want to check one thing because Big Fish was nice enough to alert me to something that I may have missed. Since I had a very busy morning away from my main computer. And that would be whether or not durable goods were upgraded for the last reporting period. And you know what? I'm going to get to that in a minute. If I have to look at over my shoulder at the other computer, I will. I hate to do that during a broadcast, but I might do it if my cell phone is not going to cooperate. Um, so we had earnings today. Now, I mentioned NASDAQ being up 1.7%. I mentioned that it's, to me, it's a little bit frothy. Okay. Um, and but we had earnings today and we had stock price movements today that are just off the charts. And how appropriate was it that Salesforce.com reported blowout earnings today? And the stock CRM up 25% today. That's a one-day move. Salesforce.com is going in to the Dow Jones Industrial Average. The Dow was almost going to wish it had made this change a week ago because Salesforce.com reported earnings today, off the charts numbers. I thought I had written them out. I don't have them right in front of me. The stock's up 67% year to date. It was up 25% today. This is a big cap company. Big cap companies don't have 25% moves in one day. Salesforce was up 25% today. Really helped push that communication services, info technology, and anything else related to tech, and let's just call it digital commerce. Facebook was up 8% today. Roku was up 11% today. Amazon was up 3% today. It's a huge move for Amazon. It's a $3,000 stock. That means it went up, what? $100? Adobe was up 9% today. Secure Now, I'm not even familiar with it, up 6.5% today. Tesla was up 6% today. Look, those are just crazy numbers. It's just a little. I got to turn the computer on because I got to look for that durable goods report, or Big Fish is just going to stop watching the program. Okay. Bear with me 1 second here. Durable goods for July, 11.2%. Did I mention that materials were one of the best gainers? Once you got past the mega growth tech names, materials were one of the best gainers in the S&P 500. They were up 1%. We've mentioned materials a number of times. Materials are an early cyclical sector. Okay. This is not the materials and the industrials rallying is not what you see when the market is just about running out of steam. These are typically early cyclical sectors that set the stage for a significant economic push higher. I'm talking about the economy now, okay? Not necessarily the market. The material sector, that's early cyclical stuff. You're talking things like paper companies and material companies and widget manufacturers and companies that make stuff that goes into bigger stuff. Durable goods report for July. This is for July. up 11.2%. The consensus was about 4%. The prior report, Big Fish, which was for June, um, was 7.7%, revised up 0.1%. That's a very small upward revision. But I think the real story is, and this is probably what you were alluding to, July durable goods orders up 11.2%. A lot of that could have been transportation, rail cars, airlines. Although I wouldn't think airlines, with the big issues that Boeing is having, and with the airlines saying they don't see international travel really kicking in until the later stages of 2021. Ex transportation, actual 2.4%. So that's pretty much just a little bit above consensus of 2. It's still a good number. But this headline number of 11.2%, even though it's ex transportation, this is still big ticket money being spent on um, on rail cars, railroad equipment, and maybe some type of aerospace stuff. Maybe Amazon is ordering more planes. Maybe UPS and Federal Express have had to beef up their fleets for the surge in online activity. I'll try to dig into the details of it tomorrow. But also on the X transportation number, that would be for July also, but the prior number, 4% revised up from 3.6%. That's a decent upward revision. That's a 10% upward revision, being revised up 0.4%. X transportation. That might be what you were looking at, Fish. So thank you for alerting us to that. Oil inventories down 4.7 million. They were expected to be down 1.6 million. And of course, you've got this wild card of this Hurricane Laura. It's going to be a Category 4. We don't know exactly where it's going to hit yet. But it's been on the path where a lot of these storms that run through the Gulf don't necessarily go through deep water, where all the offshore wells are. They might just glance it a little bit. This one, I think, is taking a direct path over a lot of where the rigs are in the Gulf. Inventory numbers being down, oil prices being up. That does make sense. But what doesn't make sense to me still is the energy stocks just being not good. Okay, so one other thing to mention that's very interesting here is the S&P 500 up 1%, 3478. The NASDAQ up 1.7%. The VIX, which is the volatility contract, which is usually a hedge against the market usually goes up when the market goes down, or when people have a feeling that the market is just about to take a big hit. The VIX was up $1.20 today to 23.20. Now, given yesterday it was at a very, very low level, we had that big rally in the last hour and a half yesterday. Really the last hour. So the VIX got sold off as that rally accelerated into the bell. The VIX up $1.20 today, but I would love to know the last time the VIX was up $1.20 or 5% on a day when the S&P was up 1% and the NASDAQ up 1.7%. I think people are making a bet here that there's going to be a sharp 2 to 3 day, 3 to 5 day correction. They may be wrong. We might not get that. We may just go down a little bit. We may just flatline and consolidate these gains and have the market trend sideways for 3 to 5 days. That would be consolidating the gains without a big without a significant pullback. And look, a significant correction would be something in the lines of, 8 to 10%. I'm just talking maybe a 2 to 3%, 3 to 5% correction. That would still bring the NASDAQ down 3 to 500 points. It would bring the S&P down to where maybe it would challenge the 3,400 resistance level, which was a big round number that it went through earlier in the week. The VIX up 5% on a day when the S&P and the NASDAQ are up 1% and 1.7% respectively. I don't know if I mentioned the Dow. I think I glanced over the Dow. The Dow was up 80 points today. It went out at 23,832, up 0.3%. I can accept the Dow doing that and the advanced declines being negative by 3 to 2, but not the NASDAQ and the S&P being so strong. So we also had big earnings today from, I mentioned Salesforce, Dick's Sporting Goods. Now, I know that Dick's Sporting Goods fell into disfavor with a lot of people when they stopped selling firearms 2 years ago. They just crushed their earnings report. Net sales up 20% year over year. Online sales up just under 200%. I'm talking like 195, 196%. Let's call it 200. Online sales for Dick's up 200%. Now, I don't know if that includes stuff that you order online and go pick up at the customer service desk or not, but it's a big increase. Clearly, probably coming off a much lower level from a year ago. I don't know that Dick's is a place where people order a lot of stuff inline. They've got very nice stores. I think people will actually like the experience for the most part of going into a Dick's Sporting Goods. So they've never really pushed the online stuff. Clearly, with the COVID shutdown, they got to be pushing it. And they're doing well. They're up 200%. Now, here's how Dick's must be very well managed in terms of having a break-even point that they get through, and then they have a huge, what we call a hockey stick effect on their earnings. So what's a hockey stick look like? It goes along and then you get this sharp blade going up. Okay. Their net sales for last quarter up 20% year over year. That's a great number. That you will just not see that number in normal times. And that's a year over year number. That's not Q2 having a big rebound at the end of May and in June versus Q1 when everything went into the toilet. This is Q2 2000 versus Q2. This is Q2 2020 versus Q2 2019. Up 20%. Look, I'm sure maybe there's some people buying a lot of Dick's sells great athletic and workout gear. Okay. They sell a lot of stuff for outdoor activities. What are people doing a lot more of? Outdoor activities, working out at home. I guess even if you're working out at home, you're going to upgrade and buy new workout gear from time to time. They sell a lot of it and usually at the higher price points than some places. So, net sales up 20%. Their earnings were up 148% last quarter, for 2020, this reporting quarter, versus the same quarter a year ago. That's a hockey stick effect in big, bold numbers that you would never see a bump like that unless they'd have some type of a massive write down or a lot of stores being shut down from storms. And they're so diversified. They're never going to get overly exposed to storms because they got stores everywhere. Sales up 20%. Earnings up 148%. The stock up 15%. The symbol is DKS. Please, I'm not recommending you buy the stock. I'm not saying you should sell the stock if you already own it. I'm just pointing out that they had uh, an incredible earnings report and a big move in their stock price uh, in relation to that or in response to that. So, what do we got going on the rest of the week? Tomorrow's Thursday. The next day is Friday. Friday at the end of the day, 4:01, is the day when um, Apple splits after the close. This will not affect Friday's price of what you see for Apple. It will really be for Monday. Okay. But there may be high volume in these names corresponding with some moves in some indexes. Apple splits 4-for-1. Tesla splits 5-for-1 after the close on Friday. You have 3 stocks going into the Dow Jones Industrial Average. Let's see if I can do it from memory. You have Honeywell. You have Amgen, the gold standard in the biotechnology field. And you have Salesforce, which was up 25% today. So if Salesforce was up 25% on a day after, if their earnings had been next week, that would have had probably maybe a 300-point impact on the Dow Jones Industrial Average. That didn't happen today because it's not in the Dow until it just pushed the stock higher. It's not, and it will give it a higher entry point basis on Friday. The 3 stocks that are going out: Raytheon being replaced by Honeywell, ExxonMobil, you could say being replaced by Amgen, but it's Amgen is not, certainly not in the energy sector, and I don't want to lose my train of thought here, but Pfizer going out. You could say Pfizer is being replaced by Amgen. Pfizer is a big pharmaceutical company, obviously. At one point in time was the most heavily owned institutional stock in the market. Yes, big fish. 4-for-1 on Apple, 5-for-1 on Tesla. So for Monday's trading next week, if Apple's right around $500. Let's say if Apple closes at $500 Monday morning, it would show $125 unchanged. Tesla was up 6% today. What was that? 120 points. I don't even know what Tesla went out at. Let's say Tesla went out at 2,100. 5-for-1. So that would be like 5. That would be 5. That would be 420. Tesla would be divided by 5. 400. Tesla would trade between right around 420, 425. If Tesla closes at 2,100 on Friday and it splits 5-for-1, somewhere around $420, $425. Big Fish is saying that Honeywell is heavy in telecom also. And look, that is further justification for them going into the Dow, because with Apple being split 4-for-1, you're gonna have a much lower, with no changes, you'd have a much lower impact from the digital commerce world on the Dow Jones Industrial Average. The Dow's been criticized on and off for 20 years as not being current. So if Honeywell's got the telecom exposure, Salesforce is a behemoth in the digital commerce world at the corporate level. Those are going to replace and may even kick in a little bit extra the digital commerce effect representation in the Dow Jones Industrial Average that it's losing from the 4-to-1 stock split in Apple, because the Dow, of course, is a price weighted index, not a market cap index. The divisor will change significantly. I don't really know to what. Um, it may even go down a little bit because you're taking a $500 stock down to a $125 stock, and then you're adding in three stocks. Salesforce is 140, 145. Exxon's going out, it's in the low 40s. Amgen's going in, it's probably in the 60s. I should check that before I say it because I really don't have any idea about Amgen. And the other one, Honeywell, going in, Raytheon coming out. The divisor may even go down a little bit, which would mean that every point price move for a Dow stock would have a slightly smaller impact on the Dow average. So, kids sporting starting again. That's a good reason for Dick's to be doing a lot more business. But the only thing I would say, Big Fish, is that I don't know if their Q2 ended at the end of June or if they're on a slightly off calendar where that ended at the end of July. Because you got to realize this is a quarterly earnings report from a little bit in the past. Either the quarter that ended at the end of either they end at the end of July or they end at the end of June. Sure, I'm sure a lot of people could have said, "Look, we're probably going to have kids sports in the fall," even before like it became official. Bottom line is, Dick's Sporting Goods crushed it. Salesforce crushed it. A lot of these other stocks without even news today. Facebook up 8%. Maybe there were a little bit of chatter in the a little bit of chatter that Facebook might have, they might still be interested in TikTok or something, or maybe, you know what? I don't know if I wouldn't even play that into it. I just think that the space was very, very hot. People were buying their favorite names in this space. I think it's a little exaggerated, but things can get very exaggerated from time to time. So we sanctioned, John, we sanctioned 24 China companies. It is a step in the right direction. I don't know exactly what type of sanctions, whether there were penalties involved or just some notifications that you got to stop doing what you've been doing. But we'll try to take a closer look at that. So it's almost 7:40. I really want to thank everyone for joining us. This is the Anderson Report. I'm Tim the Source Anderson. I will have a broadcast tomorrow evening. I have a couple things going on tomorrow morning, but I will be on Twitter also with any new info out there. I just want to take a quick look at the data that we have coming out tomorrow. Of course, it's Thursday, so we have initial claims and continuing claims. We're looking for that forecast to be, we went up from 960 first-time jobless claims 2 weeks ago to up 1.1 million last week. The estimates are for that to decline to 1 million this week. Clearly, we'd like to see it drop even a little bit further. Continuing claims, they don't have an estimate for it. The prior was 14,844. I got to think that's going to drop. We'd like to see a big drop in that some week. I think you get a drop of a million and a half or 2 million. Get down with a 12 handle on that, and I think the market would like it. Oh, and we get the second estimate, which is the first revision on Q2 GDP. Obviously, Q2 GDP initially came out minus 32.9%. There were estimates higher. There were estimates lower. But there is no doubt that people will be looking at that revision tomorrow very closely, not just the revision, but the components internally to see what has changed on a little bit of raw data replacing some of the initial surveys. And we've got a pending home sales number. The home sales data has just been crazy sick to the positive, using sick as a positive adjective. The housing data has been sick. And we had a prior number before for June, pending home sales up 16.6%. That was clearly from May. Estimates are for not that steep of an increase, but still, actually, to be honest with you, estimates are all over the place because the consensus of all the people, the consensus is for a jump of 5.6%, but the lead economist for briefing has a forecast of plus 9%. So that number could have some fireworks in it tomorrow. And that's it. Look, again, I really appreciate everyone's support. I like the action in the chat. I think it adds to the value of the broadcast. This is the Anderson Report. That's my YouTube channel. I'm Tim the Source Anderson. You can watch it on Periscope if you prefer, TJ Anderson 12, or even on my Twitter feed, TJ Anderson 1. I'm sure I'll be on there later tonight and tomorrow. Everyone have a nice evening, and we will talk to you tomorrow evening.